And in our top business story, Emirates NBD has doubled its 5-year bond size to 400 million Australian dollars, the equivalent of 1.36 billion dirhams, following strong demand. According to reports, the bond is a part of its 1.5 billion Australian dollar debt issuance program and matures in 2019. According to a company statement, the bank previously issued a kangaroo bond of 250 million Australian dollars in 2006, the first Middle East-based institution to issue an Australian dollar-denominated transaction. Last Tuesday, April the 29th, following the release of the bank's Q1 financial results, it was announced that the bank planned to sell at least 200 million Australian dollars of 5-year notes. Following very strong demand, price guidance was tightened and the deal was upsized to 400 million. Investors reacted positively with a final order book of 515 million Australian dollars across 93 orders. 32% of orders came from Singapore, 25% from Hong Kong, 24% from Australia, 10% from the MENA region and 9% from Europe. The UAE came in as the 4th most optimistic country globally in terms of consumer confidence. That's according to the latest report. According to a quarterly survey by Nielsen, consumer confidence in the UAE jumped 4 points to 114 in Q1. That was compared to Q4 in 2013. More than 2/3, at 68% of markets tracked by Nielsen, reported an improved recessionary sentiment compared to Q4 2013, with the steepest improvements in the UAE, Switzerland and Peru. Recessionary sentiment improved in the UAE and was the lowest in the region, where the percentage of respondents who believed that they were in recession dropped from 44% in the fourth quarter of 2013 to 33% in Q1 2014. On a global scale, consumer confidence returned to pre-financial crisis levels in the first 3 months of this year, its highest since the first quarter of 2007. The Tayer Group has aggressive expansion plans for the GCC region, and there are more acquisitions in the pipeline. That's according to company officials. The comments came at a press conference earlier today from the group's regional general manager, Francis Darmai, who stated that they are looking to capture a bigger market share and complete travel solutions for the region. In January, they initiated a restructure of operations in the UAE with defined plans for a large expansion, which will include new retail locations in the country. The group, the largest travel and tourism company in Saudi Arabia, also revealed that they are set to announce significant contracts and deals at this year's Arabian travel market, which is running from the 5th until the 8th of May. This comes in line with the group's recent acquisition of a 70% stake in the Egyptian tourism and services company Al Hanouf, as well as Elegant Resorts in the UK and a 5-year agreement with Nepalese Airlines.
The group has a huge expansion plan in the GCC. The reason being is we want to imitate our success from Saudi Arabia. So our strength in Saudi Arabia is retail, with more than 320 offices in Saudi Arabia itself. And then we have a huge corporate base. So we want to be able to imitate that. Dubai as a city is a great start. UAE as a country is a great start. So we're going to be having multiple retail offices within the UAE, including Dubai, Sharjah, Abu Dhabi, Al Ain, Ras Al Khaimah, etc. And then as we move into 2015 and 16, we'll be having other retail offices in the GCC, including Oman, Qatar, Bahrain, and Kuwait. This would be multiple retail outlets backed by a corporate call center. We'll be having a new VIP retail in Jumeirah, which would be our new GCC head office.